Good morning. Welcome to the B.F. Anderson Technical Report for June the 30th. Warren Buffett. People that know me know that I have studied Buffett over the years, and the key to studying Buffett is you need to look at his performance in his early years, not in his latter years, because now he's got over $100 billion under management and basically has to handle things very differently. But one of the truths he talks about, he says, and you can read this closely, but it says, be fearful when others are greedy. Be greedy when others are fearful. So, one of the indicators that we keep an eye on is the bull-bear ratio. Now, just kind of think about this for a minute. It's a survey that's done by the American Association of Individual Investors. They've got about 2 million members, so it's a very large survey. Now, take note here that we are really in a historic area. The last time we were this deep in the indicator, which is where what we're doing is we're taking the number of bulls in the survey minus the number of bears, and the historical average is about 7.5% would be the result. But right now we're at a negative 41.10, which is way, way, way down here. But take note, because we're going to talk a little bit about 1990. The way to understand this is that you got to keep everything contextual. You have to look at a lot of different things. And one of the things you should be aware of is that market bottoms tend to come when everybody is fearful. I have never seen a bear market start when everyone was already afraid. It always seems to come when we're in extreme greed. Another quote by Buffett, he says, the stock market is a device for transferring money from the impatient to the patient. So if we use an example like we did last week, this is Microsoft, and this is 1990. This is that historic low that we saw with the bull-bear ratio here just a minute ago. You can see the market made a low right here around October, November of 1990. However, if you had on your watch list, which we would have had, Microsoft, which has turned out to be a fantastic investment, you can see here, it went through the same very difficult period as the market. However, it really didn't break out into an uptrend until, January of 91. So the point being is that if you were patient and just watched and waited, you can see the benefit. Now, I'm going to change things up a little bit on our indicator. I want to make sure y'all understand this indicator. What we do is we take 5 indexes. We're not looking at the Dow Jones Industrial Average. We're looking at 5 different indexes, of which one is the NASDAQ. Now, what I have here is the 25-day moving average, which is blue, and the 50-day moving average, which is red. So this is the moving average of the price of the index. Now, the rule is we have to get above the lower moving average, and that lower moving average has to turn decisively up to get a buy signal on the NASDAQ. But then we look at the mid-cap stocks, which is the S&P 400. It's the same concept. Now, what we have to see here is of these 5 indexes, and here's the third one, the New York Stock Exchange, all the stocks on the New York Composite, 3 out of 5 have to get above that lower moving average, and that lower moving average turn up. But as you can see, the downtrend is basically continuing, and we're not getting any type of buy signal on these indicators. Now, here's the small cap stocks. This is the S&P 600. Again, no action. Here's the S&P 500. Same problem, where we actually got up and kissed that lower moving average, but it never turned up and really did not hold above it. Now, also, I wanted to mention this particular fund, which is kind of a way to understand the growth side of the market, because I'm of the opinion, and several people would agree with me, that if companies are not growing, or if the growth stocks are not doing well, the chances of a bull market are fairly low. So you want to keep an eye on growth-oriented indexes. Well, this is an ETF called the IPO Renaissance. Now, this is all stocks that recently went public, let's say within the last year or two. And so it is really pretty much the growthiest portion of the market. Well, we're actually starting to see somewhat of a double bottom here, and we did get above that lower moving average, which has really not turned up. But we're starting to see some improvement in the growth side of the market. Now, this is another way to look at it, and this one is not as pretty. This is a ratio of basically growth stocks to non-growth stocks. In other words, consumer staples, it's an industry with consumer staples of low profit margin, high volumes, not really the greatest investments in the world. But anyway, what we're doing here is we have a ratio of the NASDAQ divided by the consumer staples. And you can see here waterfall decline, came down, made a low. We tried to rally and then failed. And it's looking like it's probably going to break down again, but we'll have to see. The rule on this is, now this is a weekly indicator. The rule is you want to at least get above that 10-week moving average, and again, get that moving average turning up. But everything is really turning down. Therefore, continue to be cautious here. Here are the three economic indicators we keep an eye on. This is interest rates. This is the 10-year Treasury. Never really got above 3.5, and we're starting to pull back. Now, is that because we're going into recession, or is it because people are fearful and dumping a bunch of money into the bond market? We'll have to see. Now, on oil, the price of oil, it got up above 120 a barrel, has pulled back, trying to bounce a little bit. On the financial stocks, which are very important, continue to see somewhat of a downtrend. Looks kind of like it's going to fail again. Now, on the new lows, again, we're seeing way too many new lows. A little bit of an improvement over the last, say, 4 days, but still too high. In other words, the general concept of new lows is that once the market, gets saturated with selling, and at some point it stops. Now, this is trend strength. This is where we're taking 8 moving averages, and we're looking for this type of pattern, which we're not getting. We're getting a very nasty looking pattern. So trend strength on the NASDAQ is at 0. We did get up a little bit above that lower moving average, but it just failed. It just can't get going. Here's the S&P 500, same situation. We've got a trend strength of 0. Now, I also want to, being that we were talking about the bond market, this is a high yield corporate bond fund. Again, it came down, made a low, has somewhat rallied, and kind of making somewhat of a double bottom here. I really don't think the stock market can get going in any meaningful fashion until the bond market gets going first. But it continues to be in a downtrend, but does look like it's trying to bottom, but just not yet. Volatility index, again, we want to see that capitulation number, which is 40-ish. Right now we're at 28. And we really think that the market's going to get washed out quite a bit, or we'll have capitulation if we get real extreme readings. Just not seeing them. Now, on the top 5 stocks, now I want to make sure everyone understands this. This is not a buy list. These are really pretty much unresearched companies, but we have an 8,000 stock database that we then compress into the top 5 of the database, meaning that they have the highest momentum, price momentum, and that's all. It's not like we're seeing anything to do with the balance sheet or anything like that. But this is Scorpio Tankers. Now, this is oil tankers. The company is based in Monaco. And you can see it's somewhat holding in here, but I would continue just to watch this one. Here's Li Auto. This is a Chinese automobile manufacturer. It's an interesting company, though, because they've got a battery pack that allows the car to go about 100 miles per charge, but they also have a gas engine on the car that is a generator. And so when the battery pack starts getting low, the generator kicks in and starts recharging. So if you got 100 miles, you drive around town using battery pack all the time. But if you get on the road and you're worried about range, the range on this car is anywhere from 600 to 800 miles, where an all-electric Tesla, we're talking 200, maybe 300 miles. So it's an interesting company. It could be a Tesla killer. You don't know. Here's Jinko Solar. Now, the thing to realize here, we are starting to see quite a few Chinese stocks. We haven't seen these in a while. It's been years, actually. This is Jinko Solar, solar panels out of China. This company here, Arginex, is a company out of the Netherlands that is a drug manufacturer. Acting quite well, in fact. So we're seeing somewhat of an international arrangement here, the stocks that are starting to act well. This is Daku New Energy. Now, this is a company that doesn't make oil products. This is a company that makes polysilicon. They're a manufacturer of polysilicon, primarily used in solar panels. And they're out of China. It's a Chinese company. So, all in all, things continue to look kind of rough. Hang in there. Be patient. Get your powder dry. Keep your powder dry. But also, don't become complacent. Have a watch list. Have your money in your account so that if things do turn, you'll be in a position to take advantage of it. So if you have any questions, let me know. Thank you very much.